The office sector has been the poster child for the worst parts of commercial real estate since really the beginning of 2020, with record high vacancy rates, huge drops in transaction activity, and billions of dollars of distressed assets starting to hit the market. But for the first time in a while, there are some really compelling signs that the office sector might finally be starting to bottom out, which could present some really interesting opportunities throughout the rest of this year. So in this video, I want to walk through the latest research on this asset class, the shifts we're seeing in the market right now, and what all of this could mean for investors and industry professionals heading into the second half of the year. So the first thing worth mentioning here is arguably the main reason why office values have dropped so much over the last few years, and this is the uptick in vacancy rates. National office vacancy in the US jumped from just over 12% in the first quarter of 2020 to almost 20% in Q1 of 2024, which put a huge strain on office owners that were trying to service their debt. But according to recent research from CBRE, office vacancy has actually stayed relatively flat over the last 12 months for the first time in more than 5 years. And in the first quarter of 2025, leasing activity actually grew by 18% year over year. And according to Cushman & Wakefield research, even though net absorption over the trailing 4 quarters came in at negative 35 million square feet, this was a 30% improvement over Q4 2024 numbers and a 48% improvement from Q1 of last year. And during this time, some of the biggest office markets in the country have seen over 100,000 square feet of positive net absorption, with Atlanta at 114,000 square feet, Miami at 143,000 square feet, San Diego at 332,000 square feet, Midtown Manhattan at 448,000 square feet, and San Jose, California at 1.8 million square feet. And what's even more encouraging for existing office property owners is that sublease availability has also started to fall over the last 2 years, with available sublease space down to less than 155 million square feet as of Q1 of this year, according to CBRE, down almost 20% from its peak in Q2 of 2023. Now, what might be even more encouraging for office investors than increased tenant demand is the huge drop-off in construction activity that's essentially cut off new office supply. According to Cushman & Wakefield research, new deliveries of office product in Q1 of this year totaled just 4.1 million square feet, which was the lowest quarterly total on record since 2013, and the current office construction pipeline is sitting at just a third of its historical average over the last 25 years. And according to CBRE, only 22 million square feet of office product was under construction in Q1 of 2025, with more than 50% of this new product already being pre-leased to tenants. And what's really interesting about the supply story in office is that on top of the slowdown we're seeing in new deliveries right now, we're also seeing existing office product being removed from the market entirely to be converted into other, more profitable uses outside of the office sector. And the office buildings that do go through this conversion process are typically very big, centrally located assets, which can take material portions of the existing supply of office stock out of an entire city with just a single transaction. Notable projects like this include 621 and 633 17th Street in Denver, taking 1 million square feet of office space off the market, 25 Water Street in Manhattan, taking 1.1 million square feet of office space off the market, and 135 South LaSalle Street in Chicago, taking 1.3 million square feet of office space off the market. And on top of that, a lot of state and local governments are starting to step in to help developers repurpose these spaces, now starting to set aside funding to help finance these projects. CBRE actually released a report earlier this month that showed that conversions and demolitions of existing office product in the US are on pace to exceed new office deliveries in 2025, with 23.3 million square feet of office product expected to be converted into other uses or demolished altogether, and only 12.7 million square feet of new office space expected to be delivered this year. And with over 70% of these buildings planned to be converted into for-rent apartment buildings, these projects are very likely to continue to increase in popularity as new multifamily deliveries start to dial back down to more normalized levels over the next few years, and the residential market overall starts to become more attractive for developers. Now, beyond just the supply and demand story in this sector, we're also starting to see some fundamental changes to how companies are thinking about office space today that could also have positive impacts for this part of the industry going forward. Return to office or RTO mandates are becoming more and more common as companies start to see the challenges of fully remote or even hybrid remote work, and huge companies like Amazon, JP Morgan, and Google have all announced RTO mandates of at least 3 days per week over the last few years. At the end of 2024, KPMG also released a report with survey results from 1,300 CEOs around the world, with 83% expecting their companies to require a full 5 days per week of in-office work at some point in the next 3 years, which was up from just 64% of CEOs having that same expectation back in Q4 of 2023. And with the combination of rising demand for office space and the potential for decreasing supply of office product in the market, there are a lot of signs right now pointing to office having a lot of growth potential over the next few years. And this also means that if you're trying to break into the commercial real estate industry right now, the office sector could be a really interesting place to focus at this point in the cycle. And unlike multifamily or industrial, which tend to get most of the attention from new entrants into the business, there tends to be a lot less competition for jobs at companies involved in this space. Office is also a product type that will teach you a lot of transferable skills that could be applied to other sectors of the commercial real estate industry if you ultimately decide to move on from office at some point in the future, including things like commercial lease analysis, tenant negotiation, and even working in Argus, all of which would be applicable to working on retail or industrial deals. Ultimately, while the office sector has definitely been through a lot of challenges over the last few years, the combination of increasing tenant demand, minimal new construction, and the repurposing of existing office inventory has created a really compelling case for getting involved with this asset class in 2025. And if you are looking to break into the real estate industry right now, whether that's in the office sector or any other part of commercial real estate, and you want to make sure you have the technical skills you'll need to pass an Excel modeling exam that might be given to you during the interview process, or to analyze your own commercial real estate investment opportunities, make sure to check out our all-in-one membership training platform, Breaking a CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking a CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more deep dive content on the channel, on the office market, or any other specific sectors of the commercial real estate industry, make sure to hit the like button and let me know. And let me know in the comments what you think the future of office space is going to be. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.